Thank you for joining us. My name is Nnamdi and I am delighted to be your host today. If you are joining us from Canada, good morning. And to our friends who have connected from Nigeria, good evening. On behalf of Nigerian Canadian Association, NCA Greater Toronto Area, it is my pleasure to welcome you to our 2021 tax seminar. This program has been put together by the Niger Canadian Marketplace, an initiative of NCA GTA that promotes Nigerian Canadian businesses and endeavors. As promised, today we have a special guest who will be telling us all about taxes. You'll get to meet her in a moment, but to get us started, I'd like to kick off with a bit of housekeeping. This is just to ensure we maximize time and minimize distractions. I'm only going to ask for two things. One, let's keep our mics mute. And two, let's try not to interrupt the speaker while she's presenting or answering a question. Once again, I'd like to thank you for joining us, and I will now take us through the day's agenda. Right after welcome and introductions, we're going to go into the guest presentation. In the guest, you hear from the guest for 15 minutes, after which we'll go into the question and answer session. This is where the meat of the conversation is going to happen. It's going to be loaded. I know a lot of you are looking forward to participating, asking your questions. So if you have them, you can even start asking immediately. Drop your question in the chat function and we'll definitely address it. So it's going to be a lot of conversation. And we'll close with a vote of thanks from the president of NCA. Okay, so I told you we had a special guest, and that is Foluso Akinyele. Foluso is the founder of FAB CBA Professional Corporation, an independent accounting, bookkeeping, and tax firm that specializes in working with small and medium-sized enterprises, helping them to balance their books, process payroll, and file corporate and personal taxes. Foluso is a leader with experience across large international corporations and industries as well. He's worked with the Canada Revenue Agency, so this is her turf. She knows this terrain, she's familiar with it, and she's a finance, accounting, and tax expert. She provides tax planning and tax services for corporates and individuals, and it may interest you to know that she's a chartered financial analyst and a chartered professional accountant. So you see, this is someone who's loaded, knows her stuff, and has a lot to share. She possesses an MBA and a bachelor's degree in accounting, and she's a strategic thinker and creative problem solver. Ladies and gentlemen, it is my pleasure to present to you Foluso Akinyele. Foluso, you're welcome. I'm really excited about what you're going to be sharing with us today.
To explain what it's all about. So in Canada, we run a self-assessment system, which means that everyone is required to file their tax returns. So unlike in Nigeria, for instance, where the employer would deduct the taxes at the end of the year, they would transfer to the tax authority. In this situation, you are responsible to file your tax returns. Yeah. So I would move quickly. And then the first question that people would usually ask is, who must file a tax return, or do I have to file a tax return? And then the answer would be, it depends. So if you have a tax liability, so if you owe taxes, then you're required to file a tax return. If you sold an investment, you're required to file a tax return. If you are looking to get benefits from the government, like childcare benefit, GST, Trillium, all kinds of benefits, they usually would like to see your notice of assessment to determine what your family income would be. So you would need to file a tax return as well. So if you have employment income, even if you don't owe taxes, you may have to still file a tax return, because there's a portion of your income that should be for Canada pension plan. So you would need to remit that to the government. So if you take money out of your RRSP, then you have to report that as income on your tax return as well. Okay. So is it a good idea to file a tax return? Like I'd mentioned before, if you're looking at getting benefits from the government, then you should file a tax return. If you're expecting a refund, there is no way you would get the refund if you don't file a tax return. If you're entitled to a refundable tax credit, now refundable tax credit is something where the government is giving it to whether or not you are required to, whether or not you're supposed to get a refund from the government, that tax credit enables you to get a refund from the government, whether you have a liability or not. So if, for instance, my tax return should have been zero, as in I'm not supposed to get a refund, I'm not supposed to get to owe taxes. If I have if I'm entitled to a refundable tax credit, the government would pay that money to me after I file my tax return. Okay, and then for RSP purposes, so if, for instance, you want to put money into your RSP, you usually get your limit through a percentage of your earned income. But then if you don't file your tax return, then the government doesn't know what your earned income is, so they cannot give you that room to contribute to your RSP, for instance. Okay, if you have a loss to claim, so you should file a tax return as well. So even if there is nothing else, you're not making no refund, no taxes owed. If you have a loss, because you'll be able to carry losses into the future. So if you don't file that loss on your tax return, then you won't be able to use it in the subsequent year. Okay, and then tuition credits for students. So as a student, you pay school fees. Your institution at the end of each, at the beginning of the tax season will send you a tuition slip. So even if you don't have income, it's advisable that you file your tax return and put the tuition amounts into your tax return, because you'll be able to use those credits in the future when you begin to earn income. So you're able to carry the tuition tax credits indefinitely. So even if you don't start working in the next 5 years, you still have those tuition amounts. You can use them when you do start working to get a tax credit in the future. Okay, so the tax filing deadlines for individuals is the 30th of April. For self-employed individuals, so those are those who have sole proprietorships or had a side also. The tax deadline for that is June 15th. And if you're married to someone who has a sole proprietorship or is self-employed, then you could also file your tax return by the 15th of June. But then whatever amount you owe needs to be paid by the 30th of April. Okay, so those are the major ones. And I just wanted to give you an update for 2020, because we had a lot of issues with 2020 in terms of COVID. So the tax deadline is still 30th of April of 2021. But what the government is saying now is that for those who have owed, for those who received the SERB, the CESB, the benefit that the government gave, or had the taxable income of $75,000 or less, those people would be able to defer the amount that they owe on their tax returns if they do owe for a year. So you don't need to apply for that. The CRA would look at your tax situation and automatically apply the interest relief measure to qualify for it. Okay. And then also just to mention that any CRA administered credits and benefits normally paid monthly or quarterly, like the child care benefit, the GST, will not be applied to reduce the tax debt owing on the 2020 tax year. Because normally if you owed on your tax return, when you're supposed to get your GST, the government will deduct the amount that you owe first, and if there's a balance, they will give it to you. But for this period, because of all the troubles people have of COVID, the government will not be doing that on the 2020 tax amount owing. And so the ways to file your tax return, you can file it on paper. That's the slowest method. You can phone in with File My Return, but you need to be invited to do that. You will get a letter from the CRA, and it's usually for very simple tax returns, people who the government says that the amounts are almost the same, the kind of benefits they get are usually the same year on year. And then you can e-file with a tax preparer like me. So you give it to me and I will e-file your tax return for you. You could use the online softwares, which is it's called NetFile. So there are different ones out there that are recommended by the CRA as well, where you could try to do these things by yourself. And then you have the community volunteer income tax program. So if you're not able to do it yourself, you can't afford a tax preparer, and you have modest income, your tax situation is simple, then you could go to one of those volunteer areas to get your taxes done. And then so those are the options that are available. And then it's advisable that you keep your documents for at least 6 to 7 years in case the CRA decides to ask in the future for something you filed in the past. Okay, so income reporting for 2020. So due to the pandemic, the government provided benefit to taxpayers. We all know that there was the SERB, the CSB and co, and then the CRA was sent T4A slips for this payment. So most of us should have received this. For those who got the the benefits would have received T4A slips. This income will be included on your tax return. And then the CERB and the CSB, when the payments were made to you, there were no taxes deducted. So it may lead to a tax liability depending on your tax situation. Now for the CRB, which is the Canada Recovery Benefit, the Canada Recovery Caregiving Benefit, and the Canada Recovery Sickness Benefit, there was a 10% tax deducted when payments were being made. However, the minimum federal tax rate is 15%, so there might still be a tax liability, also dependent on what your tax situation is. So just to also mention that the government delivered the number of payments to government to individuals. There was a GIS guaranteed income supplement, the one-time old age security payment, the one-time GST, the one-time disability payment that were made to people. Those ones are not supposed to be included on your tax return. You won't get a slip for those. Those were just things that the government gave to assist individuals. Okay, so the government has confirmed that if you receive the CERB or you receive the CSB and you made a repayment before the 31st of December, you would not get a T4A slip. So whatever amount you return will be deducted from the amount that you got, and you would not need to pay taxes or include those amounts on your tax return. Okay, but anyone that was received after the 31st of December, you would most likely get a tax slip, but then in the 2021 tax year, the CRE would be able to make those adjustments for you. So you don't need to worry about the fact that, oh, I made the payment in January, but my T462 shows, it will show it, but then in the next year, you won't, they would make the adjustment on your tax return. Okay, and then for the Canada Recovery Benefit, there's a portion that you might need to repay if your income exceeds $38,000 in a year, and we can discuss that more in the question and answer section, because I know that the time is really running by. So you might need to make a repayment if you made over $38,000 on your tax return and you received the CRB. Okay, so I wanted to talk about employment expenses, and that's because, a lot of people worked from home because of COVID. So usually employment expenses is usually given to people who their companies would give a slip, a condition of employment slip. So you're supposed to get that from your company if you work from home or whatever situation where you kind of spend your money to earn your income. But this time around, we're having a situation where a lot of people work from home. So so the government came up with the fact that because we work from home, then at home, we should be able to deduct working from home expenses from our tax return. So there are two ways of doing this. So the first way is the simplified tax method, which the government says, okay, so you would be able to charge $2 per day for the number of days you worked at home in 2020, up to a maximum of $400. So if you work for 300 days times 2, that's 600, you can only take $400 out of your employment expenses for working from home. And the other option, with this method, you don't need to keep receipts, you don't need to keep anything. The CRE is not going to audit it, you just file the return and you're good. And then the other method is the detailed one, where your employer gives you T2200S, which kind of tells you that you can claim expenses. So in that kind of situation, you would then begin to calculate the space that you have at home, how many hours of work you did, what's the percentage of the home office that you use for the work compared to the size of the house. And then you can begin to take your hydro, your rent, your gas bills, your heating bills, everything, and then you add everything up together, and then whatever percentage you get, you do the numbers, and then you would get to come up with your employment expenses. Okay. Okay, so I've spoken about that. So I just wanted to move quickly into the business income section of it. So there's a sole proprietor, there's a partnership. With those ones you apply on, those income will show up on your personal income tax return. But then if you set up a company, it's separate. Your company is different from you. So you would do your personal income tax return, and then you would need to do your corporate income tax return as well. Okay, and then the T2125 is the statement of business activity used in reporting your sole proprietorship or partnership income and expenses. Okay, so the forgivable portion must be reported as income in the tax return of the CBA recipient in the year the loan was received. So when you're doing your corporate accounts, so you borrowed 40,000, or the government gave you 40,000, you need to recognize 10,000 as income in your tax return, and the other one as a loan. Okay. And then the wage subsidy and the rent subsidy are taxable as well because it's like income to you. So you need to put that on your tax return as well. And so my final words is that you keep your receipts, you keep your documents, be informed, research, call the CRA to clarify, or engage a tax consultant like me. If you made a mistake on your tax return, you can always adjust your return. So no need to fret that, oh, I made a mistake or a slip came after I'd filed my return. What do I do? What do I do? You can always adjust your return as much as possible. Stay true, ensure that whatever it is you declare is what it is so that you don't have troubles in the future. File your returns before the deadline to avoid interest and penalties, and pay whatever you owe as soon as possible. And then register for my account, CRA account online, because it allows you to see everything that the CRA can see. So you'll be able to see what you owe, your refunds were, when a check was sent out, you'll be able to see everything that the CRA is saying, which is which I usually, advise people to do. And then be aware, don't leave money on the table. So usually when I send documents to my clients, I usually put a checklist so that people don't leave money on the table, because some people would forget to attach a receipt or forget to put one or two things, together. So as much as possible, don't leave money on the table. So I think that I am done with my slides, so we can take the questions and answers now.
Awesome. And we're right on time. Thank you very much. I know you might have felt like we rushed you, giving you just 15 minutes to talk through what has happened in a whole year, to talk through how to manage your finances of 1 year in 15 minutes is tough. So thank you very much for that presentation. Now, everybody who's listening, I'm sure a lot of us have questions. Already I can see questions in the chat, and that is actually how we're going to run it today. If you have any questions, please feel free to drop it in the chat. We're also going to allow some people to talk. So if you prefer to talk, you can raise your hand, but we'll call on you to speak after we have gone through the questions that are in the chat. Any question relating to taxes, personal or business taxes, feel free to ask. So Foluso, the very first question we have here is from Victor Abalarede, and he asks, as relating to taxation on SME businesses, how do we relate our SME to personal tax as regards to filing? Is that a clear question?
So if it's an incorporation, so like I was saying, so you would need to file your corporate tax return and you would need to file your personal income tax return. So if you paid yourself the salary from your corporate account, you would need to have issued yourself a T4 slip, done payroll, and issued yourself a T4 slip, and which you would use to file your personal income tax return. And then you would the salary you paid yourself would have been an expense on your company, so which would have been recognized when you're filing your corporate tax return as well.
Okay, I hope that answers your question. We'll go to the next one. This question is from Ada, and Ada asks, can we file taxes for COVID-related homeschooling expenses? For example, laptops purchased.
No, you cannot.
Okay, so that's a clear and straight answer, no.
Yeah, so if you bought a laptop for your kids for school, no. But if it had been an employment expense, then your employer would have had to have given you some documentation to allow you to be able to do that. But then if you bought laptops for your kids, I know that, during that time, provinces, governments were giving parents some kind of, grant or reliefs as well to cover those kinds of things. So no, you won't be able to include them on your tax return.
Thank you very much. Next question is from Napoleon, and he asks, is the 38,000 income threshold to repay all self-collected applicable to household income or per individual in the household?
It's per individual in the household. So what we're technically saying, what the CRA is technically saying is that 38,000. If your income is over $38,000, then maybe you didn't really need the CRB. So it's not the CERB, it's the CRB. So what they would do is they would look at what you earned outside of the CRB, and then whatever the difference is, if it's over 38,000, then you might need to return a portion of the amount that you collected. So, but you need to file your tax return first to know what all that will come to. So once you file the tax return, then the government would know, would do the computation and let you know what, if at all, you need to make any repayments.
Okay, thank you very much. We've got a few more questions. There's a question from Abiodun. He asks, I started my business in April 2020, do not have any staff yet. Which of the business support programs would I be entitled to?
So if you started your business in April 2020, you might not be able to get any benefit. And the reason is because, usually the wage subsidy, the rent subsidy, and even the CBA, you need to be able to prove that your income reduced in 2020 as a result of. So if you started your business during the COVID time, there is no comparison. So usually they would ask you when you are making those applications, what did you earn as far as the wage subsidy and the rent subsidy? What did you earn? What was your company's income within the same period in 2019? But then because your company didn't exist in 2019, you might not be able to get any benefits from there.
Okay, I hope that answers your question, Abiodun. Next question is from Elo. Elo wants to know, I landed in November 2020, but was still working my Nigerian job all through 2020. Will I be required to file?
Yes, you will. So from the date you landed in November 2020 up to the end of the year in 2020, whatever worldwide income you earned period would need to be declared on your tax return. So it's expected that the income you earned in November and December, depending on when you landed in November, you would need to include that on your tax return as income. If you paid any taxes from the country you were coming from, you would include those taxes on your tax return as well. If it's from Nigeria, there's a kind of treaty that Canada and Nigeria have, so you would be able to, they would accept that, deduction. So you would just put in all the details and then send that off to the CRA.
Awesome, thanks for clarifying. EA wants to know, if you have a T5S or T5008 and the amounts reported are in USD, do you have to convert to CAD before filing?
Yes, you do. Yes, you do. So there are two options of doing that. So if you're able, if the T5008 has just a few entries on it, you can decide that you wanted to check what the USD card exchange rate for those dates are, and then make the conversion. But then if there's a whole lot, you can use the average USD card rate for 2020 to make the conversion. But then you need to convert because you're reporting in CAD. We're filing our tax return in Canadian dollars, so you need to convert it from USD to Canadian dollars.
Thank you. Olade is asking, will paid utility bills have any effect on my taxes? Should I add this to my filing?
Okay, so paid utility bills will only have an impact on your tax return if you were working from home and your company gave you a T2200S, then or a T220 conditions of employment, which states that you can claim work from home expenses. If it did, then your utility bills would be useful for that. Yeah. So or you had a side hustle that you were doing from home and you had your space that you had carved out to do your work. So if you're self-employed and you had a place where you had carved out to be doing your work from home, then your utility bills, you'll be able to use those, as part of expenses to your business. But if you just had a regular employment and you were working, going to your office and all that, you will not be using your utility bills on your tax return.
Thank you. Someone in the audience is asking, how do you treat kids' common tax receipts?
Okay, so the common tax receipts, you would do nothing with them for tax purposes. Yeah, because it's not childcare expenses. So the only thing you can claim will be childcare expenses where you have to put your child somewhere so you could get to work, so you could work or you could go to school. So if you have common is like an additional, tuition, additional educational thing you're doing for your kids. It's not a childcare, center. So you wouldn't be able to claim that on your tax return.
Thank you for clarifying that. Someone asks, I got scholarship for a program and received T2202. Would I need to impute a figure in the room to carry over as claim?
Figure in the where?
I guess what they're trying to ask is if they would need to impute a figure to carry over as claim.
Okay, so if you got a T2202 and you got a scholarship, I expect you should get a T4A as well. Because usually when you get a scholarship or a grant, you get a T4A slip. So you might want to look out for that, ask the school if they have that to provide to you. So, but if you put in your T22, if you didn't have any income and you don't have a spouse to transfer it to or a parent to transfer it to, you will include the T22 in your tax return and you will carry forward to the next year. So you will still have the tax credit to be able to use in the future when you do begin to earn income.
Awesome. Question from someone in the audience. Can a separated family with 3 kids file taxes separately, sharing the kids? For example, one spouse files with 2 kids and the other files with the last kid.
Yes, you can. Yes, you can. So it's a dicey situation, and what usually would happen would be that it's expected that maybe one kid is with you, right? So I don't want to know the details. I usually say anything you don't want the CRA to know about, or anything, just tell me as it is. So if you have 3 kids and one is staying with your husband and 2 are staying with you, then both of you and you guys are separated, then you can claim 1 kid, both of you can claim the other 2 kids, and you'll be able to, there's something that they call the spousal, not the spousal amount now, there's something we call the dependent amount that you'll be able to claim on your tax return. Now, when people who are married file their tax return, they have the basic personal amount and they have the spousal amount, right? But then they're not able to claim the dependent amount on their tax return, because either you do the spousal amount or the dependent amount. So if you're separated, you won't be able to get the spousal amount. So that's why they allow single moms and people who are separated to be able to get the dependent amount on the tax return. So if both of you want to claim a dependent amount, you can. Just that if the CRA decides to review your file, you must be able to prove that that child that you claimed on your return actually lives with you. Everything is happening on your own end, So if you're not able to, then they will take it off your tax return. They would reassess you, and whatever difference you need to pay, you would have to pay it. So unless it really does happen that way, I won't advise that you do that. But technically, if kids are separate, if parents are separated, and the kids live with different parents, yes, you can claim them on your return.
Awesome. It's getting a little spotty again. Can you still hear us?
Yeah, I can hear you.
I'm just checking to see that we can also hear you. Awesome. There's a question from Napoleon. He asks, do COVID grants and loans given to Canada businesses need to be reported on corporate tax returns? And if yes, what proof is required to report the amounts?
Okay. So the answer is yes. You would need to include, so the grants you received. So the loan you receive will go in as a loan in your books. The grant, the wage subsidy and the rent subsidy, for instance, are not loans. It's something the government has decided to give to you. So it will go as income on your books. So you include that in your income of your corporation's books, right? In terms of documentation you would keep, whatever documents you got to say you've been approved, or, or the bank account. But trust me, those payments are coming from the CRA. So they also have details of who they paid those amounts to. Right, so they would still, so you just include it in your return, have whatever documentation you have, maybe it's your bank statement or whatever document that says you've been approved for the wage subsidy or whatever, and then you just keep that in case anyone wants to ask. But I don't expect them to ask much, because the payments came from their own end, so they can see it on their side.
This is very useful. Someone wants to know, is there any way I can file my tax through my CRA account directly? This is my first time.
No, you can't. No, you cannot file through your CRA account. So your CRA account, you can view your tax returns that you filed in the past. You can view your information. You can view whatever letters the CRA has sent to you, but you cannot file a tax return on the CRA website. Well, at this time, you still can't.
Awesome, awesome. Another question, when filing, can I claim the 15% withheld on my USD dividends as foreign tax paid, even if it is not showing on my T5?
Okay, so if you have a T5, once you plug in the amount, usually dividends have, there's something they call dividend tax credit. So once you put in the amount, it should, whatever way you're filing your tax return should be able to compute what the dividend tax credit would be. But ideally, if a deduction was taken on your tax return, on your investment, when you receive the dividend, it should show up on your T5 slip, I believe. But if it still doesn't, just whatever you have on your T5 is what you should put on your tax return.
Okay, thank you. Dallas asks, I registered my business incorporation in 2017, but it has been inactive, and I have not filed in taxes for that business registration ever since, except for my paid job. What do you suggest in terms of business benefits?
So first of all, there's a rule when you set up a company, you need to file your returns. Even if it's a nil return, you need to file it. So you still need to go back and file for 2017, 2018, 2019, and then 2020. It's the law. You need to file it. So even if nothing was going on in there, you would need to file your tax returns, and put nil, whatever, And then if you're not using the company, or you're not using, you might want to shut down the company if you're not using it, and then set up one when you do need one. Or if you decide that you plan to use it in the future, then you just need to keep filing your tax return. Right. So in terms of benefits for the business, because the business is technically not operating, I'm not sure there are any benefits, because the benefits available are for those, at least for now, are for those who, have been in business and unable to cope because of COVID. So those are the benefits that are available for now.
That is very helpful. This next question has a number of things that need to be addressed. The first is, how does income affect your Canada Child benefit? And it follows, what are the thresholds? Is it based on individual or family income? And also wants to know if sale will be counted as income for this purpose and affect your next payments.
Okay, so the first question, could
how
you repeat
does
the
your
first
income
one?
affect your Canada Child benefit?
Okay, so your income, so to determine what the Canada Child Care benefit would be, it's usually income, family income for both spouses, the age of the children, the number of children, those things, affect, determine what you would get as child care benefits. So I think that's the first question. The second question is, I've answered it in the first one, which is it's your family income. So in terms of thresholds, there are various thresholds. I could share my details. Namdi, you could share my details with everyone. So if anyone asks for that question, I could share with you the CRA, how they, compute it. There's even a calculator online that you can kind of use to determine what it might be. And also, usually, the older your kids get, the lower your childcare benefit, because at that point, they don't need that much according to the government, you don't need that much to take care of them compared to the younger kids. Then the more you earn means that you don't need that support as much as possible, as much as you did, before. Yeah.
Awesome. I think you already answered the last one. The person asked, will SEP be counted as income for this purpose and affect your next payment? I know you already mentioned earlier that SEP will be counted as income.
Yes, SEP
But
is
do you want
counted.
to
Yeah,
address whether
SEP
it
is
will affect
counted as
next
income.
payment?
Yeah, so SERB is counted as income. So when you're filing your tax return, SERB is one of the things you include as income. So your total, your net income, which is what is used in computing your childcare benefit, already has the SERB in it. So yes, SERB is part of it. So SERB, CESB, the student benefit, the Canada Recovery benefit, they're all included.
Wonderful. That asks, if I worked from home and my employer hasn't given me the T2200S, does this mean I am not eligible to claim this refund, or should I request for it?
So you could request and see if the company would give you, but if they're not giving you, then they expect you to use the simplified method, which is the one that says $2 per number of days you work from home, up to a maximum of $400. Most employers went with that route because it would be crazy for them to, as in it would be so much work, as in crazy work, to be able to issue T2200s for all their employees. So when the CRE came up with the option of the simplified method, most employers went. Just a few, decided that they wanted to still go with the 2200. So if your employer didn't give you and you ask them and they tell you they're not giving you, then they expect you to use a simplified method.
This is helpful. Chinedu asks, for utility expenses for my private registered home business, which are tax deductible, must the utility receipts be in my name? Does it matter if the utility bills are in my spouse's name?
No, it doesn't matter if it's in your spouse's name. As long as you can prove that there's a connection, there's a relationship and all that, you're good. So it does not have to be in your name. If it's in your spouse's name and you can prove that, you guys make the payment, that's all that matters.
Awesome. All I want to know, I started the company in March 2020, but I have not started operations. Do I need to file a tax for the company? I think you answered the question like that already. Regardless of whether your company is running any transactions, you need to file taxes.
Yeah.
Okay, so let's go to the next one. From Olu, if you did not earn income in 2020, should you file taxes for 2020, though you got SEB?
Yeah, so SEB is income.
Yes.
So the reason why people got SERB, what SERB was supposed to do is that people lost their jobs because of COVID, or were unable to work. People lost their jobs because of COVID. So the government was kind of replacing that income that they normally would have get with the SERB. So technically SERB is income. So if you worked and if you didn't work and you got SERB, then you should file your tax return because SERB is income. Number one. And then number two, even if you didn't get SERB and you didn't earn any income, you should still file a tax return. It would just be a nil tax return. Because those things are used to determine your benefits as well. So if you're going to get the GST, HST credit that is done quarterly, for instance, they would use your income from your tax return. But then if you didn't file your tax return, they can't even, compute what that would be. So whether or not you earned any income in the tax year, it's advisable you file a tax return.
Okay, question. Thank you very much. Question from Ola. When can I have access to the My CRA accounts, please? He says,
okay, so
Ola says when, but I don't know if they mean how. Maybe you can answer both.
Okay, so once you file a tax return, if you've never filed a tax return before, you won't be able to access the CRA account online, because to set it up, it will ask you for some questions from your last tax return. So you would need to have filed the tax return first before you can then set up your CRA account. So once you've filed your tax return, then you can go to the CRA website and click on sign up, and then to ask you for some information on your tax return, you put that in, you set it, the whole thing up, and they would send to you by mail a security code that would give you full access to your account. So
Awesome.
You need to file a tax return first. If you've never filed a tax return, you can't set that account up.
That is very clear. Napoleon asks, how many years do I need to keep my receipts and documents used for tax filing? And how far back in number of years can CRA audit a person or business?
Well, the CRA says about 6 to 7 years. So you just try to keep them. They don't usually go that far back unless if there was a major problem that they need to investigate and it's a real big deal. But it's just advisable to just keep it just in case.
Awesome. Prince asks, when do I inform the CRA after firing an employee or he resigns?
Okay, so you don't need to inform the CRA when you fire an employee or when your employee resigns. What would happen is that when you do your payroll file remittance, when you do, let me explain it this way. When you do your, so you would make your payroll remittances every month, and then at the end of the year, you would do your T4 filing for all your employees. Now, because you will still be required to prepare a T4 for the person that resigned or the person that you fired from January 1st up until the point where the person stopped working with you. So from there, the CRA will be able to tell, who remained at the end of the year. So it doesn't matter. You don't need to notify the CRA to say, I fired anyone. No, as long as you do your computations properly and you're paying your payroll remittances on the people that you paid salaries to, you're good.
Wonderful. Big T asks, for utility bills, isn't it just a portion that you can claim for business?
For utility bills, so it depends. So when you say business, is it self-employment or is it corporate? So if it's self-employment, it would be a portion of the utility bill. So if, for instance, in my house, I have let's say 4 rooms altogether. So let's say 6 rooms altogether, plus my living room, plus my dining, plus my bedroom, everything is 6 rooms. And I use one of the rooms as my office. That'll be 1/6 of my house, right? So 1/6 of my house is what I would be able to claim. And that space that I have is designated for my office only. I use it for nothing else. Then I'll be able to claim 1/6 of my utility expenses on the house. I'll be able to claim 1/6 of my rent. I'll be able to claim 1/6 of my internet. I'll be able to claim 1/6 of my hydro, of my gas, of my heating, on my business financials, so to say.
Okay. And there's a question from Victor who goes, for employers, what penalty, if any, do you get for late wages reporting? Can you report once a year?
When you say wage reporting, do you mean as in the payroll remittance?
Yes, yes.
If it's the payroll remittance, it's okay. The amount owing multiplied by, so the rates change is based on, it's based on some rate that the government uses. So I'm not sure I have the exact rate, but the rate could change. So, but there will be penalties on that. And then if the person needs more information, the person can, send me a message. I could get the information for the person exactly. But then you would pay interest from the time that you should have made that remittance, which you didn't, up until the time you actually do make it. You would have to pay for it.
Okay. There's a further question from Abiodun. He wants you to clarify further regarding business corporation. I need further clarification on my business that I operated from home for a while when I started in 2020. Can I claim home expenses when filing my taxes?
Could you repeat that again?
So I operated from home. I operated my business from home for a while in 2020. Can I claim home expenses when filing taxes?
Yeah, so if you work from home for your personal business, then you would declare the income on your personal business, and a portion of the space that you were using to work from home, you would be able to include that based on the home expenses, and the portion of your house on the time you spent working on the business, you'll be able to include that on your business as an expense on your business portion of your personal tax return.
Okay, thank you very much. There are some other questions. What happens if I file my taxes after the deadline?
If you have a refund, nothing will happen actually. You will just get your refund late because you filed it late. But then if you owe, then the interest begins to calculate from the 30th of April, which is when you should have filed and paid the amount owing. So if you filed late, which means that not only did you file late, there'll be a penalty for that, but then you're now owed from the 30th of April up until the time that you actually did file the return. There'll be interest on the amount owing.
Okay, I hope that is clear for everybody, because it's an interesting question. I know some people have asked that question in a different way. Another question here goes, if I file my taxes and forgot a tax deduction, a credit, or made a mistake, is it too late?
It's never too late. So you can always go back and to make an adjustment to your tax return. And there are options to do that. You can do it through your CRA account online. So once your return has been assessed, first of all, your return needs to have been assessed. Once you get a notice of assessment from the CRA, because the reason why is that sometimes you forget to put something on your tax return, the CRA will spot it and put it in for you. So that's why it's usually advisable. You won't be able to do it until you get a notice of assessment. So you'll be able to check if the CRA has done it for you. If the CRA has done it for you, then you don't need to adjust your return again. But then if the CRA has not done it, then you would be able to do it through your CRA account online. You'll be able to, there's a way you can do it online. You would say, go to change my return, and then you just follow the steps, or you could get a tax preparer to do that for you, or you could send a T1 adjustment form on paper, put in the changes you're trying to make, and you send that to the CRA. So it's never too late. So which was why in my last slide, I mentioned that if you forgot to include something in your tax return, don't fret. You can always send an adjusted tax return to the CRA.
Okay, one question here is, there are so many forms to be filled. It's somewhat confusing. What are the basic forms everybody needs to have to be able to file their taxes completely?
Okay, so if you're using paper to file your tax return, this is where you'll be having the headache that we're talking about. So if you're using one of the online softwares or using a tax preparer, you won't need all that. 1. 2, so the major forms will be the T1 jacket. It has everything in it, but then it also depends on your tax situation. So if you have a tuition slip, then you would need to include Schedule 11. If you have RSP contributions, you need to include Schedule 7. If you have investments, you need to include Schedule 3. So it all depends on what you have. But the major one is the T1 jacket. It will have all your details. It will have all your income. It will have your tax credits and the regular tax credits and everything. That's the major form you need to fill out. But then depending, and if you take a look at the T1 jacket, as you're filling in the numbers, if something requires another schedule to tell you attach Schedule 2, attach Schedule 4. So in that kind of situation, you go back to your pile and pull out the Schedule 2 and know that you need to attach this to your tax return when you're sending it to the CRA.
Thank you. Thank you very much. So essentially, filing online is the way to go. It reduces your stress.
I know
and you have
that
less to think about.
Yeah, but I know some people still feel comfortable, doing the paper one. Some people have been doing it like that for years and they like it. So
As a follow-up to that, who can people reach out to if they want to file taxes? Obviously you, but can you help people understand what kind of help they can request for, or who they can reach out to ask for help?
okay, so you can request for a tax preparer, to do your taxes for you. You could do it yourself online through the certified online software that the CRA publishes. I think there's Simple Tax, there's TurboTax, and all that you could use as well. So anyone who tells you that they're a tax preparer, I expect the person knows what they're doing and should be able to, so you would also see there would be HR Now block and one or two other. So, so there are a couple of us out there. So it's just for you to know, but usually referrals are good. So if someone has used someone before, you feel more comfortable, or you've heard the person speak like I'm speaking now, then you know that, okay, the person knows what the person is doing. So I can try this person out, and all that. So usually if you want to file a tax return, usually use a tax preparer, use one of the online softwares. Or if you're brave and you know what you're doing, you can use the paper, but the paper takes longer. So while for the online ones, you get your tax assessed within 2 weeks, sometimes 3 days, sometimes 4 days. But they usually tell you that the time frame is 2 weeks. For paper, it's about 6 weeks. It takes a really long time. So paper is not advisable. Not only is it stressful, you have to post it. What if it gets missing on the way and all that? And then when the CRE then gets it, they're still going to spend 6 weeks processing it. So I won't advise you do a paper return.
Okay, thank you very much. We have just maybe 4 minutes left. I'm going to try and rush through the rest of the questions. Someone wants to know, what are the common mistakes people make when filing taxes? Maybe the top 3 or the top 2 that you think everybody needs to be aware of and try and avoid.
So that would be omitting a slip or filing early in such a way that so what I usually advise is you kind of know what your situation was and what you're expecting, right? So when you have not received a slip, then you would know. So you don't file your tax return yet. But like I said, if you forget to file it, if you forget to include a slip, you can always file the tax return later. Another thing would be maybe information a bit, maybe punching in the wrong information. So that would be more like typographical error. Your date of birth is 7th of June. You use 2nd of February, 7207. And then, it causes a lot of headache because it scatters things, with the CRA, or you were trying to put in an amount on your tax slip, on your tax return. It was supposed to be 41,000, you put 14,000, So some of those things the CRA would catch and make the adjustment for you, before sending, because your tax slips, the tax slips that you have with you, trust me, the CRA has it, because all employers are supposed to not only give you a T4 slip, they also send a copy to the CRA, so the CRA can see what you have and what you don't have. What I've also known, another thing I've really noticed is that when people do RSP contributions, the first 60 days of the new year, it still falls in the prior year. So the first 60 days of 2021, the RSP contributions you make apply to the 2019 tax year. So I've seen situations where people forget to send that to the tax preparer or forget to include that on their tax return, thinking that because I made the payment in January, February, March of 2021, so it belongs to the 2021 tax year. So they leave that out, right? So they always have to go back to refile their tax return. So those things those are one of the things, people need to take note of when filing their tax return.
Very helpful. I know we're almost out of time, but I'm going to feel very bad if we don't address the new questions that are coming up. So I'm just going to ask if it's possible to answer the questions just very briefly. I think some of them don't require long responses. That'll be awesome. Shope asks, my wife landed in Canada in September 2020 and didn't earn any income from when she landed. She just got a job last month, February 21, and wants to know, does she have to file taxes?
Yes, she has to file taxes. So technically should be filing a nil tax return. Right, because she didn't. Awesome. Yeah, because she didn't earn any income between September when she landed and December.
Great. Aderoke Sonny wants to know, is there a list of accredited tax filing businesses and how do you maximize your returns?
Oh, I think that there might be on the CRA website. You might want to check, because for a tax preparer to be able to file a tax return, you must get some kind of registration done with the CRA. So you can't just wake up and become a tax preparer on your own, and for them to even collect the return that a tax preparer is sending to them, then you must have registered for e-filing and get your e-filing number, and they would have done their review, they would have done their assessment before they approved the tax preparer to become a tax preparer. So I think on the CRA website, you should be able to find details of that.
Wonderful. Someone wants to know, can I get a return on a student loan, or do I have to pay for it?
Could you repeat that question again?
Lara is asking, can I get returns on a student loan, or do I have to pay for it?
A return on a student loan. I'm not sure I understand the question, but what I could say in terms of student loan is that if you have a loan and there's interest being charged on the interest on the student loan, the interest being charged on the student loan, you can get a tax credit for it, right? And then if you pay your student loan, it doesn't affect your tax return. It's just the interest cost slip. The body will send you a slip for the interest loan for the tax year on it. So I'm not sure what the question was, but
okay,
there's no other credit for paying down on your student loan. There's no tax credit for that.
Okay, so let me just make a quick announcement for everybody who's asked a question we don't get the opportunity to answer directly. Foluso's email address is folubee@yahoo.com. That's FOLUBEE@yahoo.com. Feel free to reach out to her with your questions. She's going to be more than happy to answer. I'm going to ask for just 2 more questions, and then we'll wrap it up because we have a hard stop at 12 p.m. So someone asks here, how do you utilize the unused federal tuition component that gets carried over every year? I am now a student. How is this beneficial to me? Did you get the question?
No, I think connection went down. Could you
How
take
do you
it again?
utilize the unused federal tuition component that gets carried over every year? I am now a student, and how is this beneficial to me?
Okay, so like I had mentioned before, when you file your tax return, you put the tuition amounts in and all that, and then you would see it as, even when the CRA sends you a notice of assessment, they would tell you that you have unused tuition amounts of XYZ. So the following year, when you then begin, or the year when you begin to earn income, whatever you've accumulated, you'll be able to just say, so on your tax return, if you're doing it manually, on your T1 jacket, you would see when it gets to the tax credits bit, you will see tuition amounts. And then you tell you to fill a schedule 11. So what did you have before? You'll be able to put the balance in. If you're using just a bit of it, you'll be able to take what you need and then carry the rest forward to the next year again.
So this is the very last question. Just a very quick response from me, if I may ask for that. I started Uber in June 2019, but registered my business in 2017. Can Uber income serve as my business income so I can apply for benefits?
So if it's a company and if you set up a company to do Uber, you can try, but I know that, the CBAC that was being done, the Canada Emergency Business Account that was being done was, they wanted to see, commitments in terms of you have bills, you have rent to pay, or you have, utilities that you're paying on your business and all that. So I'm not sure how Uber, would work with that, right? Because Uber is just a business where if you don't do the business, then you don't incur expenses. But CBA was for those companies where whether or not I make money, my expenses are still coming up, right? I still have to pay rent, I still have to pay salaries, I still have to pay for whatever leases or whatever agreements I've gone into, right? So, but with Uber, you don't need, if you don't do the Uber service, then you don't need you won't incur an expense. I don't know how that would fly, but I would suggest that you could try and see how it goes.
Thank you. Thank you very, very much. We're going to put a pause on questions now. It's been a wonderful session. We still have so many questions coming in, but I'm going to ask everybody to reach out to Foluso directly through her email address. We're also going to put up this video on NCA's YouTube account, so you can check it out there. I'm going to share that in the chat. Right now, I'm going to invite the president, Lady Kemi Amuson, to give a vote of thanks. So, Lady K, please. You're welcome.
Wow. I think we would not be doing justice to Foluso if we don't give her a round of applause. Can you unmute yourself and please give her a round of applause for this beautiful presentation. Thank you so very much. As you know, the commitment of NCA is to actually organize grassroots programs. Those are programs that will have direct impact and be useful to the people. Thank you so very much, Foluso. Thank you so much to the team, the committee that has put this together. Thank you to our elders. I can see Prince Julius Adeleke. If I don't mention your name, it's because you're not on video. Thank you. He has been a great support. I can see some board members, Mr. Sonny. He never misses any of the programs. Thank you so very much. OJ Robo is equally a board member. I can see you. The committee, please, it will not be good if you don't see your faces. And please let us acknowledge this wonderful work you have done. I'm starting from their chair, Chief Bidemi Abolarinde. Please, can you wave to the people? Wave to them. Thank you very much. We have Isa Achibong as part of the team. Please wave your hand. Thank you. Nnamdi, of course, you have seen him, the host. Wave your hand. Who else is remaining? What's the name?
Antonia is here.
Antonia, where's Antonia? I can't see her. Wave your hand. Always hiding, right?
Yeah.
Thank you very much. George Chukwu, thank you very much, our Vice President. Wave your hand.
Big T.
Big T. How can I forget him? He's impossible. He has been the one in the IT back end doing everything. Please wave your hand if you can see your hand.
You can hear my voice, not see my face right now.
We can't see your face. So I'm acknowledging the board members, executives, Abbas Akonji, I can see you. Thank you so very much. JBs, that's our PRO. Where is he hiding? Okay, so I won't take too much of your time. Just to let you know, we have another program you will love tomorrow. I've put the information out there. That is for the business enterprises, right? Can someone read it out? I already put it out there for everyone. Let me read it out for you. It's business and entrepreneurship, government, and other funding opportunities for the Black community. There's actually a lot of money being released that is the flyer. Thank you. A lot of money being released by the government, by the federal government, into the Black community because of challenges in the Black community. We had the one for not-for-profit last week. The one tomorrow is for existing businesses. People are thinking of going to businesses, whatever the case may be, as long as it's for profit. And it's going to touch a little bit on the not-for-profit as well. So please don't miss it again tomorrow. We have all these packages waiting for you and more. And using the opportunity to reach out to you, you have any program you think can be beneficial to the community, please hit any of us up, either board member or executives. We will work with you. Thank you so very much. So don't let me take your time. I yield over to the host. Thank you, everyone.
Thank you, everyone. As a final word, NCA is active on social media. So look for us on Twitter, look for us on Facebook, look for us on Instagram, and on YouTube is Nigerian Canadian Association, Greater Toronto Area. Just look us up, you'll find us. If you have any questions more for our guest today, Foluso, reach out to her on folubi@yahoo.com. And you can also call her directly. Her phone number is 289 885-4026. So thank you very much, everyone, and have a wonderful Saturday. Enjoy the rest of your weekend.
Hey, Nnamdi, before I let them go, one more thing. You did mention the NCA website. All these handles, all these links will be on the website as well.
Correct. All the links are on the website, and the website is ncagta.com. Thank you very much for that reminder, Big T. That's our IT guru. Thank you, sir.
Can you also tell them about our next program in another second week of the month? Continuation of this, maybe the business aspect of it.
Yes, so the Nigeria Canadian Marketplace, which brought this tax seminar to you, usually has an activity every second Saturday of the month. Please look out, keep checking our website, keep following our handles. The information is always going to be available and updated, and we're going to keep sharing on all the platforms that we have. Thank you so very much for joining. Look forward to connecting with you again in the very near future. Thank you, everyone.